Also, the day after Renee and John bought, so too did one of the company directors. Now, I don't know who this guy is, but there was a third individual, a guy called Brian Jacobs, who purchased $1.3 million worth. So Renee, John, and Brian all bailed in more or less within a day of each other. And I bet these three guys are whispering and giving winks over the water cooler, so there is something happening. So, based on nothing other than these trades from the combined insights of the two most influential people in the business, to be honest, I suspect there's some significant upside from here. These three individuals have not combined to virtue signal. It's highly unlikely that between the three of them, they'd throw in several $1 million at just about $50 a share. So I believe that to be a very strong bull signal.
Hi there, and welcome to Stock Club, podcast brought to you by MyWallSt. I'm Mike, and joining me today is MyWallSt's chief investor, Emmet Savage. On the show, we're discussing Apple's recent launch event, Bill.com, and a couple of interesting insider buys, as well as Airbnb's report on New York's short-term letting ban a year on. So enjoy. Emmet, how are we getting on?
Guten Morgen, Mike. How you doing today?
I'm good. It's been a while since me and you got on just for a normal pod. We've been missing each other.
That's right, actually. Yeah, last week we ran the half and half where I had my solo podcast backed up by yourself and Amory, and I'm glad you guys were there because when I looked at the traffic afterwards, I realized that there's more listeners to the second half of the show. So I have to think about my solo approach big time.
I don't know. The first one was the best show we did in a few months, so I wouldn't overthink that.
Ah, well, there you go. Look, I'd love to open with a sneak peek, Mike. And as you know, I rarely tease something in Nexus, despite it having what I think is the best performance of any service I've ever seen. Well, as you know, Mike, we took the last 52 Charging and Fearless stocks, which is our weekly service, which uncovers under the radar global stocks, I think is how we describe it. And we brought them over to Nexus, where we flagged the top 12 and then ranked the top 3 to buy and hold. And the top spots are absolutely incredible companies. Honestly, this is some list. So that's coming next Thursday, this day next week, September 19th. And the first 5 people who email pod@mywallstreet.com will get the deal of deals on Nexus. And when it's gone, it's gone. So if you want the deeds, drop us a line. There you go. Shameless plug done. Shameless plug one.
Shameless plug one. This is why you came back.
Yeah.
You got some ads to read off.
Well, no, the next isn't an ad at all. I just want to give a shout out to Jonathan Raymond, who is an avid Stock Club listener. And I met him this week on Tuesday for a coffee after he dropped me a note. And I just wanted to say hello again here. And this guy has some story of adventure and success and of grit and resilience. He's just finished his MBA, and I particularly wanted to thank him for reaching out. I never knew when I started MyWallSt that in our line of work, we will take a lot of beatings when we get something wrong, like endless beatings. It's a harrowing career, I may as well tell you. And it's hard work, but especially when every thought and word you've said in the past, which is pretty much being published 7 days a week, is put under a microscope later. And people say, but you said, and life moves on. It's very, very difficult. But we got something right. And I really appreciated Jonathan reaching out to me because thanks to our free Learn app, he has become a long-term successful stock investor who sat with me and talked about a 40-year investment strategy. And he already has an incredible portfolio. And, he was thanking me. I was like, well, thank you for at least bringing something positive my way. I really appreciate it. Well done, Raymond. You're doing it, man. You're an inspiration. So I just wanted to give you a shout out.
Oh, that's great. I love that. I love hearing those kind of stories. Yeah.
Yeah, me too. It was just great. I love meeting listeners. I love meeting subscribers. I love meeting people who love stock investing, and I'll do it for the rest of my days.
Okay, perfect. Okay, that's great. So where are we going with the start of the show? I think I'm going to kick off.
Yeah. Well, I tell you what, big one there, which is the Apple launch event that happened on Monday, and I know you were tuned in, Mike. So let's throw the ball your direction. Talk to me about the highlights. What happened?
Yeah, so you've seen I don't know how many of these over the past 20 years, and apart from like the one that launched the first iPhone or the first iPad or the first iPod, everything else is, I wouldn't call it a nothing burger, but they're
Mm,
never that encapsulating, I suppose, because they're just newer versions of stuff they've already owned. Like, as in, I always see the meme of the dad, and he's wearing this purple shirt, and he's holding up his Christmas present, which is the exact shirt he's wearing to describe the Apple event. Do you know what I mean?
yeah.
So that's kind of my thoughts. But I'll run through what was announced, and we can discuss anyways. So there's going to be a new iPhone 16 and an iPhone 16 Plus, a new iPhone 16 Pro, and iPhone 16 Pro Max, which no, I tell you, they're all very similar. An Apple Watch Series 10 with an updated design, the Apple Watch Ultra 2, AirPods 4 and
Hmm.
AirPods Max in new colors with USB-C charging, and the first Apple Intelligence features for iPhone 16, which will launch in beta next month. So the iPhone 16 Pro starts at 999. The Pro Max starts at 1200, basically. So pre-orders begin on Friday, and they're launching on September 20th. Now, Emmet, I'm going to ask you a question. Okay, does
Go.
anyone
Hit
on
me.
Wall Street care about the new iPhone Pro Max having four finishes, including white, black, natural, and desert?
Well, as you said, it was a nothing burger. I was really, I only read the headlines inside their own app, and they couldn't tell a
I was
story that
about to,
was
that's a
exciting.
great place
Of
to
all,
read it to get excited, because they're going to make a big deal out of it.
it's true. Well, this is true. Well, of all the products that you just read out there, with the obvious exception of the AI thing, which one, if any, created a pop of desire in you? Is there any of those products where you went, "Yeah, I'm going to buy that"?
None, none at all. And I don't think
Mm,
that's what these events are for. Do you know what I mean? I think the fact that Apple has just simply cracked the code on consumer
yeah,
marketing and branding to such an extent that it's literally able to sell inferior products for higher prices. Do you know what I mean? And I'm not saying that Apple
well,
products,
nearly.
like, I'm not saying I'm not.
I think they're premium products at extra premium
Yes,
prices.
but like in terms of relatively speaking, like you compare the capabilities of AirPods to the capabilities of, I don't know, Sony or Bose AirPod
Yeah,
equivalents, and like they
yeah.
actually have worse performance, and yet they cost more because of their branding and because of everything else.
Now, there was one thing I spotted in their own PR launch about the very AirPods you mentioned, which is they now have the first FDA approved way of measuring your hearing and checking your. They said it's now a health check via your AirPods, which I thought was quite the stretch.
Yeah.
It's like, okay, tell me about my ingrown toenail, AirPod. But anyway,
I don't know. I
but
don't know if that's the goal. But it is
but
interesting because we talk about Apple leaning into healthcare a lot, especially with its wearables. So
yeah.
the
Mm.
AirPods 4, they're going to have a hearing aid feature. So if you're not sure what to get your folks for Christmas here,
Oh,
lads, the AirPods 4 could be
ah,
a great buy. And then the new Apple Watch is going to be able to detect sleep apnea as well. So it's kind of
mm,
more of the same. I know Apple have great ambitions for constant glucose monitoring and stuff like that, where it's probably seeing reading the tea leaves a bit in the sense of our wearables technology in particular is likely going to be the next stage of healthcare in terms of monitoring, in terms of this
yeah, yeah,
constant presence on you and like updates, because it has all the capabilities in terms of what you can see and like what it'll tell you. And again, like, this is what we're talking about. There's probably more high quality and intense fitness trackers than an Apple Watch, but more people just have an Apple
yeah.
Watch because it's an Apple Watch.
That's right.
Um,
That's true. That is the product that created somewhat of a pop of desire in me when I read the PR release. I don't have an Apple Watch. I used to have a Fitbit. Like I think most people's Fitbits had ended up in a drawer somewhere. And now that I'm running a lot more, I actually want to get some kind of tracking device, and I thought, yeah, I'll have a look at that. But my concern about the original watch was it looked a little bit like somebody hit an iPad with a shrinking device, and it was just too thick. You didn't happen to notice if the new watch is a bit thinner, did
It's
you? Really are
it's
going into pedantic
it's the
detail.
thinnest ever, apparently, Emmett.
Oh, it's the thinnest
The
ever. Oh,
thinnest
well, I
ever.
like that one.
Yeah.
That's exactly the measurement I was looking for. Did they mention did they mention that Oculus thing? I don't even remember what it's called. The what was the Vision Pro,
The
was it?
Vision Pro,
The
no, I think the
headset?
Vision Pro is kind of on
Not
the back
even a
burner.
word.
But
Oh,
I
yeah, I
suppose
think they
I
might have
suppose
announced it.
out of like what's truly tangible from this announcement, I think the genuinely significant thing, which because it's not a new flashy product, might go slightly under the table a small bit, is just that they're really heavily steering into the AI. So they
Mm,
said Tim
yeah,
Cook was quoted saying that the iPhone 16 is going to be designed from the ground up for Apple Intelligence, and we haven't really seen what Apple Intelligence entails, but the potential, and we talk about the reach Apple has and its impact on consumers just worldwide, and basically
yeah.
like the control it has. It's like a gatekeeper for the internet for so many people around the world. If you get Siri integrated with ChatGPT or Google's Gemini or an equivalent in such a way that it becomes seamless, you're going to see the next step up or uptake in wide scale AI usage. Do you know what I mean? It's going to be the first
Mm,
real. I don't want to say use case because ChatGPT is incredibly useful for a lot of people, but in terms of like wide scale rollout, I think it really will be a kick on in usage. So that's
yeah.
where I would see if they really do get this Apple Intelligence firing and it becomes incredibly useful. That's what I could see is like, yeah, okay, Apple is really in the game now, but it's still getting hits for not really answering full questions there around the generative AI and all the rest. So yeah,
I saw a promo video, and in it, the person pointed their camera at a shop, I know, a restaurant, and took a photo, and then their phone was able to tell them, the menu and that kind of stuff. And I was like, I thought we already had that. It didn't look all that futuristic to me. Anyway, was there anything else happening over at Apple apart from the event?
well, for me and you here in Ireland, there was some pretty big news. So um,
Oh, yeah.
if
I
you're
know what you're
outside
going
of
to say
Ireland, you
here.
might not heard this story. If you are inside of Ireland, you've heard it about 20 times. But Apple lost its case against the EU and it owes Ireland 13.2 billion euro in back taxes. And Emmet, that's at least 130 bike sheds
Wow.
from my calculations.
And the other thing, Norwegians, everyone in Norway is rich because they've oil. Are we all rich now because we've Apple?
Yeah, well, I don't know. I'm not very good at maths, but I'm pretty sure that's what, like 2 million quid each.
Yeah, okay. That's fine, no problem.
2 million quid handed out
This
at
is
the
a
post
great
office.
show. What if you heard it here first on Stock Club, everyone? You're rich. That is really good. Saving stamps ahoy.
Yeah. Like,
And I know our government was pushing back,
yeah.
as in, don't pay this, don't pay it. And I think the logic was, we need you to stay, and in order for you to stay, you shouldn't have to pay, taxes due. Is that the rough logic,
Pretty
correct?
much, yeah. And there's a lot of posturing too. Like for better or worse, Ireland is a country whose wealth is derived from foreign direct investments. Between the tech and pharma that's set up here, they haven't propped up our economy. They've put a rocket ship under it over the last 20 to 30 years. And that's
Mm,
why the government was fighting against this because what happens if Apple leaves Cork? It would be devastating. And you could take that into context of what happens if Google and Facebook leave Dublin, or if some of the pharma companies, which are set up in much smaller towns, if they get up and leave, it could be devastating. So Ireland, in their wisdom, were trying to play the long game, which I agree with too. You have to be seen as being friendly to these mega companies setting up here. But
big time.
they also they were kind of maybe playing both sides fairly well as well. Do you know what I mean? They were seen to be pro business. They were on Apple's side. They didn't want to take the money, but then the results of the verdict came in. They're like, oh, well, I guess you owe us 13 billion quid. Thanks. We've got loads of plans for it. So yeah, look, I don't know.
It's very interesting. I mean, the Ireland's economic reality is in the memory of a lot of people, even my own age. So, like, for example, I went in to do my bachelor's degree in 1992, which was a degree in applied physics in DCU. And everybody who was graduating that year in 1992, every single one of the physics graduates left the country, went on to do a PhD, or joined the dole queue, or what's the dole called in America?
Don't know if they have
You know,
dole.
just they do. I don't even know.
Social
Well,
Security.
for our American listeners, it's a free Social Security, a free check every week, which nobody wants. And every single person in AP, Applied Physics, graduate 1992, pretty much was heading to Dublin Airport. By the time I graduated 4 years later in 1996, every single one of us had at least 4 or 5 job offers, and there was bidding going on for us. I remember ringing my first employer and just saying, look, the other guys have offered 5 grand more. 5 grand in 1996. And my employer at that time matched the offer. I mean, this was just unbelievable. And the point of that uh, anecdote is that we know the power of having direct foreign direct investment. All of the offers on my table and all of my classmates' tables were from companies from overseas who had set up in Ireland, whether it was Intel or some processor maker making routers and gooters in Sandyford, or Apple down in Cork, or 100 other brands, were all as a result of American investment. And that really did open the eyes of people my own generation to the power of getting your economic policies right. Because rather than having queues at Dublin Airport or at the Labour Exchange, you had queues of employers looking to take young graduates out of colleges. And that's a very powerful force. So I understand the game that the government are playing.
Yeah, but and I completely agree. But I think they're happy to take the money now that it's all done and dusted at the same time.
2 million each, can't argue with that.
Yeah, someone might have to check my maths if you want to write into pod at mywallstreet.com.
No.
Okay.
Check Mike's maths and email us at pod@mywallstreet.com. Anywho.
Okay, moving on then, Emmet, you were looking at, so you got someone, a friend, Michael Fields, was chatting to you on Twitter for your latest thoughts on Build.com. So especially there was some recent insider purchases. You were once a shareholder, so you take a crack at kind of discussing the business. I think it's fair enough to say, just as you always do, kick us off with a little brief history lesson and then we'll move from there.
Oh, yeah, for sure. So Bill.com is actually called Bill Holdings. So when you go look at it, and here, that's a fun fact right out of the trap. The real name of Bill.com is Bill Holdings. So
Yeah, it's a
already our
fact.
listeners are shaking. Yes. Already our listeners are shaking their heads and having a chuckle. Well, I never knew Bill.com was called Bill Holdings. You're welcome, folks. Well, Bill.com, while its real name is Bill Holdings, to me that sounds like a guy who works down in accounts receivable or payable or whatever. When you get your expenses and they need to be paid, I'm going to ring Bill Holdings down in accounts receivable. Bill, how's it going? It's Emmet here. I was in San Jose last Wednesday and I submitted a receipt for a hotel and a bottle of champagne and 42 red roses that I needed to close a deal. Could you pay me that today? Hello, Bill. I tell you what, let's split the price of the roses. You pay for a dozen, I'll do the other 24. Anyway, so Bill Holdings is the real name of Bill.com. Well, pull over, folks, because that chuckle is about to become a laugh, because guess what the company does? It does what Bill Holdings, the guy, does, right? So the company, and this is what Bill.com does. It provides software as a service, cloud-based payments, and spend management products, which allow users to automate accounts payable and accounts receivable transactions, as well as enable businesses to connect with their suppliers and or customers to do business, eliminate expense reports, manage cash flows, and improve office efficiency. So Bill Holdings, the guy, is in fact a company. So here is the story, and I have Yahoo Finance open, and today's shares are $54 a pop, and its market cap is $5.7 billion, which, as our listeners know, is pretty much the amount of cash you'd need to raise if you wanted to buy the business in its entirety. And of course, other factors would come to play. But let's just say that Bill.com is a nearly $6 billion business. And while the shares are $54 today, they're about $335 in November 2021. So they've really fallen back down, and everybody loves me describing a chart. But just imagine a shadow of a mountain, and that's pretty much what Bill.com's chart looks
Yeah.
like. And by the way,
This chart would be very
it's
typical as well, though, of the COVID
oh
darlings.
yeah,
A lot of stocks
oh
have a
for
very
sure,
similar looking chart over the last 5 years.
yeah. Oh, for sure. I mean, by the way, its founding CEO, Rene Lacerte, is quite an interesting character. He came from a family of entrepreneurs, and he holds a degree in economics from Stanford and MBA from Harvard. And he started his career out at Price Waterhouse and then into Intuit, where he worked on products like QuickBooks and Quicken and all that kind of stuff that Intuit does. So he founded a business called PayCycle in 1999, which is an online payroll service for small to medium sized businesses, and he sold it to Intuit. He obviously knew someone in there. He's like, "How do you make? Do you remember that project? Do you want to buy it?" So he basically sold it to Intuit for $170 million in 2009. Now, I know entrepreneurs who, if they sold their operation for the price of Ford Fiesta, would call it a day. But no, 170 million is nice, but you really want to get into the two comma club, or two periods, as they say in America. You want to have $1 billion in your bank account. So to get into this three comma club, I suppose Rene Lacerte launched Bill.com to further streamline financial workflows. So fair play to him.
Sorry.
Yeah, that's it. So so there you go. That's my story of Bill.com. Yeah, I could keep going, but
No,
there's only so
no,
much I can
sorry. I was
say.
daydreaming about what I would do with 170 million quid, and it's not start a
You'd
billing
start another
company.
business. I'm daydreaming what I'm going to do with my 2 million from Apple. But anyway,
Yeah,
go on. What else will I tell you about
don't
Bill?
bank on that. Okay, tell me about the insider ownerships, the insider
Oh yeah,
buying. Sorry.
yes, the ones that Michael Field spotted and tweeted me about, and it is actually very interesting. On the 26th of August, Rene Lacerte bought $2 million worth of shares on the open market, which is generally acknowledged as a positive signal because, as they say, insiders sell for any number of reasons, but they only buy for one reason. But what's 2 mil when you have a net worth of about
Hmm.
$127 million,
This
which is
was
actually the number I have for it?
this was interesting. Do you remember? Oh, I'm not sure if it was Monday.com or maybe I think it was
Mm,
Asana, Dustin Moskowitz, who's actually played by Andrew Garfield in the Social Network movie. He does the big speech,
Spider Man.
Spider Man. But no, he wasn't played by Andrew Garfield in the Spider Man movies. That was Spider Man.
Good point. Well made, Emmet.
Yeah, but he started Asana after Facebook, and he's mega billionaire anyways. And he was constantly making insider purchases, and they were getting flagged,
Mm.
and it was a very positive indicator because everyone knows it's a very positive indicator on Wall Street. And so he was almost it almost negated it, like as in you called it, like it was virtue signaling nearly.
It was virtue signaling. There's no
Yeah.
question. If you've got two or three or four or $5 billion, to throw $10 million into your project feels like nothing. It's no different to you putting a €2 investment into your bank account. You just it's negligible. It doesn't matter to you. You want your baby, in this case Asana, to succeed. It's pure virtue signaling. I know entrepreneurs who have gone to the collar to keep their business alive, and that doesn't go up in bright lights, but that's exactly what he was doing. And we have to be very aware, and I suppose cynical, when we see the CEO buying. And as I said, with your man Rene is such a great name, by the way. Renee Savage. That's a quality name. Nobody would forget a Renee Savage. I should
No,
have
they
called
wouldn't
one of my
actually.
lads. Should have called one of my lads Renee. Anyway, I get a little doubtful when a CEO with $127 million in the bank puts 2 million into their stock. However, when the CFO does it, that's an entirely different story, because CFOs generally don't have limelight. They don't want it. They don't like it. It's an intellectual pursuit being a CFO, and generally CFOs stay away from the razzle dazzle of attention, and that's the way they like it. And broadly, they don't get any attention, and nobody pays much credit to what they're doing. They just know they're there. So when a CFO buys shares on the open market, that's information as opposed to noise. And on the same day as Renee bought shares, so too did the CFO, John Rettig, and he bought $1 million worth. And His estimated net worth is about $35 million, dollars, which comes entirely from his compensation at Bill.com. But the plot thickens. Interestingly, over the last few years, he has regularly sold portions of his shares with significant transactions in 2023 alone, totaling millions and millions of dollars. He dumped about $2.7 million worth of shares in the second half of 2023. Starting in the summer and across three transactions, he took a lot of money off the table at a share price of about $110 on each sale, give or take, plus or minus
Hmm.
$5. And now he's bailing in. He's buying shares at under $50. So he dumped a whole ton at $110 each. And now he's getting in what he bought at was $49.40. The share price, as I said, is a little higher now. Now, call me Sherlock Holmes, but I bet he and Renee know something. Also, the day after Renee and John bought, so too did one of the company directors. Now, I don't know who this guy is, but there was a third individual, a guy called Brian Jacobs, who purchased $1.3 million worth. So Renee, John, and Brian all bailed in more or less within a day of each other. And I bet these three guys are whispering and giving winks over the water cooler, so there is something happening. So, based on nothing other than these trades from the combined insights of the two most influential people in the business, to be honest, I suspect there's some significant upside from here. These three individuals have not combined to virtue signal. It's highly unlikely that between the three of them, they'd throw in several $1 million at just about $50 a share. So I believe that to be a very strong bull signal and picked up by our friend Michael Fields and sent to us on Twitter.
Okay, this is really interesting. So, if you see something like that where it's three very clear indicators, would you be comfortable going in and blindly buying and following this just on the fact that these insider trades are telling you a story?
If it was the only signal I had, if I was on a desert island with a dashboard and the only thing it showed me was who's buying what shares, I would probably take comfort and do it. But no, in reality, I'd have to have a look at the business. And if we go to our old friend down in accounts payable, Bill Holdings, hey Bill, how's it going in the business there? When I had a look at the business and had it jumped into Bill Holdings IR deck, in investor relations deck, it is an amazing business. Like, let me just tell you about Bill at Bill.com, Bill Holdings at a glance. It has 475,000 companies are using its solutions, 7.1 million network members, 92% net dollar retention rate. We prefer to see that over $100, but 92% is respectable. What it basically means is that the entire cohort from last year, what are they spending this year compared to last year? And it's 92% of what they spent last year, which I presume is downward price pressure. But total revenue in millions year on year was up 22%. Anything in the 20% is really good. There's a consistent growth and execution. Total revenue, when you look at way back at Q4 2020 and plot it all the way to Q4 2024, which is what they're reporting at the moment, it's had nearly 70% compounded annual growth rate. It looks like what would you say, a xylophone if you take quarter and quarter. So on the whole, I like the business and I like the signal.
Okay, very good. So then the £64,000 question: are you going to be buying?
Well, everything I buy, everything I do is done in Horizon, as you know only too well. And there are stocks I prefer at the moment, but I do think Bill.com is a class business that may be in the bargain basement. And based on what we've seen and what we've discussed here, I think I think it's a business that is likely, based on all the signals, to go upward from here. So no, I'm not buying, but I'd be very happy to do so.
Hmm. Yeah, and we talk about kind of wild cards and taking punts and just maybe keeping interest, if that makes sense. Like, as in long term investing is quite boring by its nature, but you can do these little shorter term bets just to keep yourself kind of
Yeah.
occupied, if that makes sense. And like some indicators like that would really feed into that almost wild card strategy, we call it.
Yeah, no doubt about it. Yeah, very interesting. So yeah, and keep an eye, folks, on openinsider.com. It allows you to just see and filter for who's buying what. And of course, if you're a member of Horizon, you get the insider bot pumping you the latest news to a Telegram channel we've set up. Right, Mike, let's go to big deal. I always get this wrong. Deal or no big deal. Is that what we call it? Anyway, look, deal or
Big
no
deal or
big
no big
deal.
deal?
Deal or no big deal. Airbnb, Mike, it has published a report after 1 year of New York's short term letting ban. Big deal or no big deal?
Probably a big deal, just because I don't know, was I surprised by the data or not? In my eyes, it's a big deal just because the data paints a very interesting picture, at least in terms of making Airbnb look good. So some of the results were pretty predictable. New York hotel room prices rose 7.4% in the year compared to a national average of 2.1%. However, very contrary to the intention of the ban, rent also increased by 3.4%. That
Wow.
outpaced the national average. It outpaced other major US cities, Washington, D.C., Boston, and Chicago. Vacancy rates also remained flat in spite of the promise of additional inventory coming from the regulators. So essentially, in a nutshell, the data refutes the notion that Airbnb is the cause of the city's housing crisis and adds to our belief that it is maybe just this easy target for politicians. So
Mm,
here's a direct quote from Airbnb's report. It says, Alicia Glenn, the former NYEC deputy mayor for housing under Mayor Bill de Blasio, went as far as to say that she never saw data showing that short term rentals were affecting the housing crisis in a significant way. And I guess it's Airbnb really fighting back. So we always hear them as a target, and they're an easy
mm,
target because they're the rich tech billionaires coming in and making sure that's why our city or town or whatever else is having this housing crisis, and it's not our fault, the politicians. When it goes so much deeper, and I'm not saying, and this isn't a blanket defense on Airbnb either, because they do cause issues in certain towns for sure, but
yeah.
it's not the core cause whatsoever. There's town planning, there's a lack of inventory, there's so much more at play here than just the big evil tech company coming in and taking your houses from you. And I guess that's what this report is. It's a kickback and kind of like two fingers up and be like, look, we told you, you have way more issues than just our company. Um, so they came out fighting basically, and they actually asked the city to re-examine the policy and scale it back to soothe both its citizens because they've lost an earning capability essentially, and also the millions of tourists who visit every year. So one of the things as well from New York, and this is a very specific New York problem, is that the hotel inventory is pretty much concentrated around Midtown Manhattan. Do you know what I mean?
Right.
the
Right.
the places
Yeah.
to stay in Brooklyn or Queens or Harlem, or I don't know, if you wanted to stay on Staten Island, more power to you. But those places aren't covered well by hotels at all. And so Airbnb was such an option for there, and obviously a
Yeah.
cheaper option as well.
Yeah.
So they've they've reduced tourism to those areas in a big way. They've like basically added up the cost has gone way up to stay in New York. You've reduced your cheaper options, and now you can only stay in Manhattan. Not only, but the options are
Mm,
very much more limited in those other areas. So I'm just going to read you out what. So their VP of Public Policy came out with essentially telling New York what to do, and it was. I think it's just a strong showing. I think it was good to see. If you were an Airbnb shareholder, I would be very positive about this whole situation. So he said, it's time for New York to reevaluate. LL18 was the name of the regulation, and consider amendments that would, at a minimum, allow homeowners to once again host guests. By rolling back parts of the law, the city can increase the supply of accommodation for consumers, support resident hosts, and revitalize local businesses that depend on tourism dollars. A more sustainable, sensible, and equitable model benefits residents, visitors, and the broader community, ensuring that regulations support rather than stifle community and economic growth. And I guess this is a great indicator because we've seen a lot of cities threatening this outright ban, and it's in my eyes too extreme, and it doesn't take into
yeah.
account a lot
Yeah.
of
Yeah.
nuances that this is showing up. And New York is maybe the first major city to do so, and it's not working. And Berlin did it back in 2014 or 15, and it didn't work there as well, and they undid it too.
Oh,
So
interesting.
if we're looking at Airbnb as one of the major risks to the stock and the investment thesis is that these regulations will come in and ban them outright, I would be a small bit more enthused that, okay, well, do those bans work? And so this is some evidence. It's only been a year that they don't. So yeah, I would say big deal.
Interesting.
What do you think as an investor?
Yeah, I think so too. Yeah, I think it's a big deal, and I think I was very relieved. I mean, I'm not to belittle the problems that these cities are facing, but when you think of congestion, is actually a mathematical equation, and it's effectively what you just said. There's multiple components to why the streets are packed, and there's higher contributing factors. And Airbnb was being demonized. Even is it Barcelona now currently saying being Airbnb out? I think they're the latest ones
Yeah,
who are a bit worried about.
they've brought in that they're going to take away by 2028 or 2029. They're going to take away the short term letting licenses, so there won't be any Airbnbs
Mm,
by that stage. Yeah,
right. Well, yeah, well, they too might also find that it doesn't make it one blind bit of difference, but let's wait and see. But certainly, when you have major cities like Berlin and New York kind of saying, "Look, it didn't make any difference whatsoever," it's more, I suppose, a socio-economic debate about where people go and where they want to spend their time and how they spend their money, and eventually they will find somewhere to stay, whether it's in a hotel in Midtown or some kind of Airbnb out there in Williamsburg. Like people will find somewhere to stay, but it doesn't lessen the footfall. So yeah, I was quite relieved, and I agree with you. I think it's a big deal.
yeah. Okay. So you were looking at small caps. So the Wall Street Journal
Yeah.
wrote a report. Now may be the time to invest in small cap stocks. Lower interest rates and a stabilizing economy could fuel a rally in smaller companies after years of lagging performance. Deal or no big deal, Emmett?
Oh, it's a big deal, Mike. I've been a small cap investor virtually my whole life, a whole adult life, and the last 4 years, 5 years has just been grisly for all the reasons everybody understands. And they really have struggled due to, I suppose, primarily inflation and rising interest rates, which affect small caps way more than they affect larger companies because of their higher debt and reliance on domestic consumers and so on and so on. However, with inflation falling and interest rates expected to be cut, analysts are optimistic that small caps will outperform large caps very soon. And in 2025, small cap earnings are projected to grow 22.1% versus 14.8% for large caps. So small caps are also trading at really low valuations, and in some cases, ridiculously low valuations, nonsensical valuations. But when you're in a storm, you batten down the hatches and the storm is outside. But I'm looking at small caps now thinking that's just preposterous. It doesn't make any sense. And in turn, that kind of makes them attractive to investors at this stage who are strong enough and mature enough to look them, identify which businesses, despite their volatility, are likely to experience some accelerated growth when eventually the tide turns. And I called a turning of the tide about a year ago at last November with you on stage at the Horizon event with Bill Mann, and the three of us were in fierce agreement that small cap stay in the sun was on its way. And here we are, September. So it's coming up to a year later, and it just hasn't happened yet, which is fine. But ultimately, small cap investors, I think, are going to be rewarded, and I think they're going to be rewarded very soon. So I'm going to call this a big deal.
Yeah, I mean everything is cyclical in the stock market. You know what I mean? Like
Mm,
US's outperformance, big tech's outperformance, it
yeah.
all reverts to the mean eventually. You
Yeah.
know, and it's not helped by how strong those seven companies are at the minute. Um,
Yeah.
we
That's right.
talk about the concentration at the top of the market, but it's just so easy for investors to flock to the big successful businesses. You know?
Yeah, you're right, and it's the fact that as an extension of the point you just said, like strategies are cyclical. So the stock market is cyclical, but so too are strategies. I was chatting with Chris Mayer, author of 100 Baggers on Where to Find Them and manager of, is it Woodlock Capital Partners, on the phone day before yesterday or maybe 3 days ago. We had a really good chat. We're chatting for guts of an hour, and he was describing how his fund has done a year on year over the last couple of years to me, and even his strategy has been cyclical. He's had a lot of great years, but a lot of not too impressive years. Same goes for me with my strategy. Same goes for the next fund manager. The market is cyclical, and then as a subcategory, strategies are cyclical. And eventually, if your strategy is time proven with 40 plus years of data, it will eventually come back into favor. And I think we're looking at a period where small cap investors will be rewarded.
Okay, well, we'll finish on that positive outlook for the future. Emmet, thank you for joining me, and thank you everyone for listening in. Remember, if you want to avail of the Nexus offer we have going at the minute, and Emmet's plug from earlier in the show, you just have to email in at pod@mywallstreet.com. Only the first 5 people who email in will get the offer, so make sure to be quick. It's pod@mywallstreet.com, and just send us an email. Thanks for joining us today, and we will talk to you next week.